Hi, everybody. I have 11 a.m. on the nose, so we're going to begin our presentation today, which is a joint endeavor between CLARO and Parachute. CLARO standing for Civil Legal Advice Resource Office, part of the Western New York Law Center. Also Parachute formerly known as Consumer Credit Counseling Services of Buffalo. A lot of folks may know us by that name. I'm Libby Morsheimer. I'm the Community Outreach Specialist for Parachute. I will be leading us off today, and Ariana Gabriel will be taking over after me. We're going to work efficiently today to get through all the material we've got for you in an hour. We have a lot. And if you like, well, I'll just mention too, a reminder that the session today has to do with the essentials of credit, various forms of debt repayment that are available to you that we will go over, debt collections information, and notably, if you would be in a position where you are faced with any sort of lawsuit, judgment related to outstanding debt that you need assistance with. To just quickly, some housekeeping items to open the chat feature. Here's some information for you to access it. We would ask that you do, if you do ask questions in the chat or have comments, that you please make them available. You set it to everyone to see it. In the event we're not able to attend to your questions because of the time constraints, please do know we'll be providing our full contact information, and you can reach out to either of our agencies. Please do follow up because we want to make sure your issues are addressed. We are also recording today's session, so if you would like a recording, please, you can put a quick notation of that in the chat, and we will be sure to get that to you. Thank you. So again, to lead us off, my name is Libby Morsheimer from Parachute. I'm going to tell you a little bit about our organization. We are nonprofit, and we were founded approximately 60 years ago. We've been in the Western New York area really for some time. We remain, just as we were when we were Consumer Credit Counseling Services of Buffalo, we remain cohesive, unified, and a really dedicated team of staff who is driven to help people with an array of financial matters, concerns that they've got. Among other things, I'm just mentioning a few brief affiliations. We are a United Way affiliate. We are an A+ member of the Better Business Bureau, and even more in terms of accreditations and authorizations. On the agenda from my end of the table today is to go over the, again, essentials basic of credit reports and credit scores, how they relate to each other, building or rebuilding your credit if you find you're in a position to have to do that, and various debt management options you have available to you. So starting off with, again, some basic information that you might be familiar with in terms of the credit bureaus that actually do the reporting, the documenting, tracking the history of your borrowing and repaying credit or loans. And these are, again, the major agencies are TransUnion, Experian, and Equifax. You may have heard of them through your journey into the credit world. A credit score is directly related to the elements of a credit report. So it's a numerical score based on the data contained within that actual report. And we've all pretty much got one at this stage of our lives. There's a wide range of scores presented, typically ranging from 300 to 850. So that's wide. And if you look at the graph on this screen, you'll see that they range from poor to low to fair to good to excellent. And meanwhile, while that's happening across the graph, as you read from left to right, you see those scores are going up. So the perception of the strength of the score goes up according to the credit reporting agencies as the score is going in that direction. And basically what this is doing, what this number is indicating, is it's estimating the credit risk to the lender or to the creditor. the likelihood that you will be paying back that debt according to the terms of either the loan or the credit agreement. And the most widely referenced score now used is the FICO score, and that stands for the Fair Isaac Corporation. Right now, the FICO score 8 is one of the most commonly used scores. There's actually a lot of scoring models out there, and we'll talk a bit more about that in a moment. But the FICO 8 is probably used in about 90% of lending decisions, so that's why we would pay close attention to it. Again, just a basic essential information for you. How does your credit score affect you? How does my credit score affect me? It impacts our actual ability to even obtain any sort of credit. Say we want a Visa card, a MasterCard, we're interested in opening a Target credit card or taking out a personal loan, an automobile loan, all sorts of things. So the variability, and I mean variability to maintain credit is impacted by the credit score. And it determines your interest rates, and this is pretty important, and we're going to get back, or we're going to provide more detail for you on that particular topic. It impacts the ability to rent an apartment, to be able to sign a lease, maybe your first apartment, maybe a later apartment that you're interested in. And this is a biggie in terms of home ownership, because we know that mortgage approval or mortgage loans can last 15, 20, sometimes 30 years and are one of the biggest financial commitments you're probably going to make in a lifetime. Also approval for utility services, things like having gas and electric turned on. And something that's, I think, being debated a little bit more now or looked at a little bit more closely, but even the cost of various types of insurance can be impacted by one's credit score. And in this case right now, I'm talking about automobile insurance and even employment. If you are looking at certain employment sectors like financial services and industries, various government entities, anywhere where you might need a high security clearance for a position, they absolutely may request a credit report or a credit score for you. So credit scores and interest rates, and I mentioned this just a moment ago, the strong relationship between the two. And actually there's an inverse relationship. So meaning as your credit score goes up, the amount of interest you should be paying, the cost to borrowing should actually be coming down. And vice versa. As your credit score goes down, the amount of interest rates, the cost of borrowing or lending, the actual over cost you're going to pay for a good or a service is going to go up. So obviously we want to aim for that higher score for sustainability, because a lower payment, affected by a lower interest rate, helps that payment that we return back be more sustainable. It's more affordable, so we can incorporate that in our lives. Obviously, again, at a lower cost. And in the case of especially housing, that can provide a lot of stability if you are paying a fair, reasonable interest rate that allows you to have a stable home environment. That can obviously impact other things, like free up money for other essentials we need, like food, clothing, medical expenses. And again, you see kind of a sketch on the right-hand side of, different kinds of credit score ranges and how they're perceived by lenders and by the credit reporting agencies. So we often refer to both good credit and bad credit. So good credit, again, costs less because of our increased ability to repay it and the lower rates for borrowing. That car may cost less to you than to me, and we're going to provide an example for you of this, based on what your credit score is at the time you are applying for a loan. Bad credit costs more because of potentially one's decreased ability to repay because of those higher interest rates, the higher cost of borrowing. And I know that this is tough for folks, but we always want to make sure we mention it. that the ideal goal is, of course, to use credit cards with the intention of building good credit by only using them when you need to, or most importantly, you have the ability to pay it back in full each month. And we're going to talk about some things around that. But as opposed to paying the 2 or 3% minimum that the credit card companies often ask for, if you're able to put yourself in a position to either pay much more than that or pay the total amount each month, to not carry a balance where you're paying that interest kind of actively. So this is a good example for you, the actual price of bad credit. So if you don't qualify for a loan, maybe from a mainstream lender, again, with reasonable and fair interest rates, lots of times folks resort to using rent-to-own companies for household goods, furnishings, appliances, and whatnot. But if you do that, the downside can be you may be paying 2 to 4%, or actually 2 to 4 times more than what you would normally be paying. And that can obviously end up to be quite a bit. There's also something called short-term title loans. And if we think about this in reference to an automobile, what can happen is this: if you try to take out a short-term title loan, normally with an automobile, they would grant you about 25 to 50% of the value of that car. And that loan is short-term, normally about 15 to 30 days. If you can't pay that loan back at the end of that term, and you have turned over the title to your car, it's a title loan, they can keep your car. They've got the title to it. So that can be a very dangerous situation to have to get yourself into if you have to resort to these other options as options for you. And the lenders may also charge excessive fees and interest on such short-term loans. So I'm going to give you a quick example of an auto loan. Say this is a 20-year, an auto loan of $20,000 over 5 years. And if you have a credit score of a 720, which is a pretty good score, you might be paying an annual percentage rate of between 5 and 6%, and your monthly payment then would translate to about $370 a month, $373 to be exact. And at the end of that 5-year loan, you would be paying interest about $2,400 on that $20,000 loan. Conversely, if I come along and I have a 590 score, I have a significantly lower score, my percentage rate may be close to 20%. This is at an 18.8. My monthly payment jumps to about $500 a month. But if you look at that interest, then I'm in a position where I'm paying close to $10,000 in interest on a $20,000 loan to finance that identical automobile. So you can see then the true cost of how the credit score affects your ability to borrow and the mathematical impact of it. Now, again, we referenced the FICO scores earlier, and this is kind of an overview of the 5 elements that make up, the 5 factors that contribute to a FICO score. And we're going to go over these for you. And again, there's many scoring models out there. There may be close to 300, but the FICO is the one, again, most commonly referenced and used. And following these guidelines, regardless of the scoring model, following these general guidelines on this graphic or this diagram will help put you in a good overall position. So we're going to start with the one that has the most impact, and that is your payment history, because that accounts for 35% of the calculation of your credit score. And you can impact this the greatest by making your payments on time. All the time, 100% of the time, even if you're just paying the minimum, which again is not ideal, but if you're in a situation to have to do that, it's so critical to make that date of that payment being due. Usually it can't be reported as being late until at least 30 days past the due date, but I'd caution you to be careful with that and not kind of play around with dates past your due date approaching those 30 days. Really try to get yourself in the habit of paying that bill on time every time. To the extent that you can, avoid anything going into collections and potentially have to file bankruptcies. We could talk about that a bit more. Sometimes people don't have an option, but if you do, you want to try to stay away from those events happening, because these are going to stay on your credit report and impact your score for a good 7 to 10 years. Even simply allowing time to pass from the first time any sort of delinquency was reported can help improve your credit score. And the debt can only be reported to credit bureaus for 7 years after the account was first reported as delinquent. But if you make a payment on that account, it's going to restart that 7-year time period. The next most impactful factor is what we call outstanding debt. Now, keep in mind our first, what we were talking about is being on time. That's 35%. This is 30%. Together, that's 65%, almost 2/3 of an impact on your credit score. So these are heavy hitters to be aware of. So this is a little tricky, and a lot of folks are not aware of it, really. And I got to be honest with you, for a long time, I was not aware of this, that the creditors like or want to see the bulk of the time, at least leaving 70% of your available credit unused. And this is also referred to as credit utilization. They prefer that people use about 30% of their available credit to them. And if you think about both in the instance of within or in reference to a particular credit card and your credit overall. So an example of this is saying if you have a $10,000 credit card limit, carrying a balance of no more than $3,000 from month to month is recommended. Ideally, again, we'd love for you to be able to pay that in full, but trying to keep your credit utilization at 30% or lower is really ideal for you and will result in a bump up of your credit score. By leaving unused accounts open, that actually helps lower that credit utilization ratio. If you have cards out there that don't have any balances on them, that's actually better to kind of keep those open. If you're concerned about a creditor closing those accounts on you, one thing you can do is use them infrequently, but use them to the point that you can pay that amount off. And I'll give you a quick example. I had a Macy's card that I had not used for some time. And what I did, I was concerned about Macy's potentially closing the account on me. I didn't want them to do that. So I charged a $30 sweater because I knew the next month I could pay that back in full to kind of keep some activity on that account. The length of credit history accounts for the next portion, about 15%. And you can improve your credit score by, again, leaving accounts open, especially long-standing accounts, those you've had for the longest period of time. Again, even if there's a zero balance, if you do need to account or close an account for any reason, probably better off closing one that's a little newer than your oldest one, because they take the average age of all the accounts in the calculation. So the oldest accounts would have a larger impact. New credit. You can improve your score by watching the number of what we call hard inquiries you have either per year or in more recent history. So hard inquiries mean those actual applications that you're filling out for credit or debt or for a loan. And so you have to be careful that you don't exceed that within a year, and that you don't have it really where you're filling out a lot of applications in a concentrated period of time. So for example, now this is a little nuance or a little note to that if you are shopping for a mortgage rate or a car loan and you do so in a quicker time, that actually only accounts for one inquiry. But if, say, during that same time or during the last month, You have applied for an auto loan, you've applied for 2 credit cards, you've applied for a mortgage. That's a sign to lenders, if you're filling out a number of applications in a short period of time, that you plan on incurring a fair amount of debt more recently, and that's something that they get a bit concerned about. Counts again for 10% of your score. So you can improve your score. This is one of the last elements of the total credit score is the types of credit that you have. And this accounts also for the last 10%. So they're basically looking at the diversity in your debt, or what's often called the credit mix. Are you used to balancing what we may call installment loans, which would be, you pay in installations, you pay the same fixed amount each month on maybe a mortgage, or again, an auto loan, a student loan, and then revolving credit may be more along the lines of credit cards. So they like to see how people handle different sorts of debt. What you want to note about this is, say you have a mortgage and a student loan and you currently don't have a car loan. That does not mean you should go out and get a car loan to broaden your credit mix. You don't have to do that. Again, this counts for about 10% of your score. Most of you may know this, but there's a lot of advertising out there that can be a little confusing or misleading about obtaining a free credit report. You can obtain a free credit report now weekly. COVID had something to do with that, and that is now a permanent arrangement by going to annualcreditreport.com. This is the only federal government authorized site. And remember, you can check now weekly for free. So be careful that you don't get kind of tricked or fooled by names that might be similar to check your credit report, but then ultimately are asking you for a credit card number. You don't want to do that. So what if you need to rebuild your credit? What if you have it established, but you're struggling to raise your score? 2 really impactful strategies are, again, making all those payments on time, all the time, because that accounts for that 35%, which is robust, and keeping your credit usage or your utilization under or at 30%. Also, really be strategic about taking on new debts and trying to limit that throughout the course of a year. And think twice again about closing those older accounts. Even if you just use them very sporadically, that can be helpful. And again, regularly monitoring that credit report, which you can do now weekly, to make sure that there aren't any errors that may be negatively affecting your credit score. Just again, having that strategic and sort of wise approach to handling your credit. A lot of people fall into this trap. It isn't difficult to do by any means, but they use their credit cards to supplement their income. They see it as an additional source of income on a monthly basis to support their lifestyle. So try to only use credit cards if you know you have the ability to repay or repay within a reasonable period of time. So charging a few items monthly with the mindset that you're going to pay that balance in full. And, ask yourself for your own unique situation. Everybody's financial situation is different. How can I use my credit cards effectively to help, raise my overall credit score and help my financial health? If you have primarily negative information on your credit report or no credit, you can also look into something called a secured card, typically from a bank or a credit union. And this is where you actually give them a deposit of between $50 to $500, but that becomes your credit limit. And what they're going to do is kind of watch your behavior with that card, how responsibly you're using it, how much you're charging, and the manner in which you're paying it back. Responsible behavior and kind of acting according to the lender's desires will help you raise your credit score. Downside is most secured cards do charge an annual fee. Some charge application fees. Some can have a higher interest rate. But if you look at it as something a little bit more temporary to raise your score, it may not be a bad idea. Many solutions to debt management and dealing with debt, everybody's situation again is different. Important to listen to an agency like Parachute as opposed to a neighbor down the street or your Uncle Jim. They mean well, but everybody's situation is different. So I'm gonna talk through these a little quickly because I want to be cognizant of our time. But in terms of debt solutions, there is the power payment method. This is self-administered, meaning you oversee it. And what you do is you start to repay your debts by repaying or focusing on those accounts that have the highest interest rates first, because that's where you are getting dinged and you are paying more because of those high interest rates. So you want to pay more than the minimum to try to get those down faster. The advantages are paying off those balances and saving money, paying less interest in a shorter period of time. The disadvantage is you're going to need those extra funds to be able to pay more than the minimum to get those paid down. And also, if you continue to use those cards, you're not going to get off that kind of credit card treadmill that we can get on. So you really would have to stop using the cards to have this be an effective solution. In terms of debt solutions, there are others like consolidation loans, where you can take out an unsecured loan to then pay off the debt in kind of one convenient monthly payment. They can be sometimes difficult to obtain. You have to be real careful of the interest rate on the consolidation loan, but it's a way of organizing, making it a little tighter for you to be able to pay that debt back. Home equity loan, this is where people may use the secured because it's based on a home, that's your collateral. So that's a secured loan, and taking that out against the equity of your home to pay off outstanding debt. Again, possibly lowering your debt repayment. Interest can be tax deductible. The downside is it converts that unsecured credit card debt to secured debt. And if you're unable to pay that home equity loan off, your house is at risk. And that's something you want to be very careful of. Negotiating with creditors to settle for less is debt settlement, potentially paying less and being debt-free in a shorter period of time. But the account will reflect as settled, which can be a little bit more harmful to a credit report and lower your credit score. And it's only really an option if you're in a delinquent situation, and there are tax implications on that amount that can be settled. Bankruptcy, this is actually a legal proceeding filed in U.S. bankruptcy court. There are two major types, Chapter 7 and Chapter 13. Chapter 7 is a complete liquidation of the total debt obligation. Chapter 13 is where a plan is put into place to pay off either all or some of the debt. Can pack a wallop to your credit score for some time, 150 to 20 points, can take about 2 to 4 years to begin to improve your score, does stay on a credit report for 7 to 10 years. Debt solutions is another opportunity, working with something called a DMP, a debt management plan, through a nonprofit organization like Parachute, to develop a plan to work off or pay off your unsecured debts in full within 5 years as required by New York State law. Lots of advantages here: reduced interest rates, 1 monthly convenient payment, lower payments, late fees, over limit fees are stopped, and a potential increase in that credit score over time. Disadvantage, you have to close those accounts that go on the plan, and there's a potential short-term decrease in the credit score by doing that, as it affects your credit utilization. Bottom line is, credit really can be an asset dependent on how it's managed and used. It can unlock opportunities for individuals, and then while having the inability to borrow from a mainstream lender does have consequences. The opportunities include getting loans, getting credit at reasonable and fair interest rates. And sometimes people with lower credit scores or no credit scores get kind of these subprime offers that mean high rates, sometimes really difficult fees, and thus a lower ability to pay it back. It's more difficult to pay it back. Avoiding payday lenders and check cashing services that can be very costly and are targeted sometimes to people who are what are referred to as credit invisible, meaning they have no credit or very low credit. Opportunity can also include, again, a home, which is such a significant financial investment, and lots of people strive to be able to buy a home. It provides that stability and frees up funds for other necessary parts of life. Just quickly, what services does Parachute offer? Financial counseling and coaching, which addresses more of your behavior around money. The debt management plans that I just talked about. We do offer student loan counseling for free, up to 2-hour sessions. And keep in mind that our appointments can be over the phone. They can also be offered in the evening. If you want a deep dive into your credit report, we can do that for you, or a more expedited review. If you are considering purchasing a home, we can do some pre-purchase housing counseling to help you to make sure you're in a really good position to take on that significant financial responsibility. Or if you're on the other end of things with being concerned about a delinquency or having difficulty making your housing payment, being concerned about foreclosure, and then finally, just very broad financial education workshops that we do out in the community and that we're happy to do. We are absolutely here to help and be helpful to you. Here is our contact information. Please feel free to reach out to us at any time. And I really hope this was useful for you today. I am 2 minutes behind, so I am going to turn things over to Ariana at CLARO. I'm going to stop sharing my screen to give her an opportunity to hop on to do that.
Yes, thank you, Libby, and thank you everyone for attending. As Libby mentioned, my name is Ariana Gabriel, and I work at the Western New York Law Center as a law graduate with our CLARO program. CLARO stands for Civil Legal Advice and Resource Office. So Western New York Law Center is a nonprofit organization providing free civil legal services in specific programs. CLARO is the program near and dear to my heart. We are based off of a consumer debt walk-in clinic that first originated in New York City in 2005, and our program has been running at the Law Center since 2011. So in terms of what does a consumer debt walk-in clinic do, is that we can provide free general legal advice. We can also provide free advice and assistance about negotiating settlements with, let's say, either a lender, what we might call a creditor, so maybe a potential business that you're working with, or in another scenario, almost like a debt buyer or a collections agency. We could assist with making a settlement plan for payments. We typically also assist with cease and desist letters to debt buyers, or if a person is receiving debt collection letters and they need to validate that the debt is theirs or have to raise other disputes. So we also assist with writing credit correction letters to credit reporting agencies like TransUnion, Equifax, or Experian. And then obviously, as we are part of a legal office, so we can assist with responding to consumer lawsuits regarding debt collection actions. So that's writing answers. We can assist with opposing motions where they're asking for summary judgment. And I will be explaining what some of these motions are moving forward, and as well as motions to vacate default judgments. And in the past, we've also made motions to modify wage garnishments. So the goal of my presentation today is kind of providing a roadmap for debt collection lawsuits and what typically happens when there are collections actions taken against people. So before it becomes a debt collection lawsuit, there typically is a pre-lawsuit stage, a stage when you're in a lawsuit, and what might happen afterwards. So I have started at the very beginning. So first, what might happen is a person does find, based on financial hardship, that unfortunately they can no longer pay some of their bills. So while they may fall delinquent on a certain account, they may find that they are no longer able to catch up. So maybe they are no longer just marked as delinquent, they have defaulted in their either credit card agreement, a loan agreement, or just also services to pay for. Now, after 180 days, that business or bank or debt collection agency can no longer count the account as an asset. So what this means is they have to charge it off. Now, charge off does not mean that the debt is forgiven. If you see it on your credit report as charge off, typically what this just means is that they are no longer counting it as an asset. They are now considering it as a business liability, in which case is why it starts to proceed through collections actions. So once it's charged off, it's not forgiven, but a person may start to receive either debt collections letters again from the business or the lender, or a debt collections agency. They may receive phone calls as well, asking if a person can make lower monthly payments or if they can settle this account either in a lump sum. So oftentimes businesses or banks can find that they cannot always carry liabilities on their bottom line. So what they will sell the debt to debt buyers. So these will be collections agencies that typically do buy portfolios of debt. So they are actually paying pennies on the dollar. And as a reminder, they did not lend the money to you. So they actually did not have any of like the um, bigger losses. However, they've paid pennies on the dollar to collect on this debt. So in which case they will also do some of the collections actions, such as sending you debt collection letters or also calling you. But then afterwards, they are typically more inclined to file a lawsuit. Now, once a lawsuit is filed, the person has two kind of routes to go through. So they can respond through a written answer. And if a person is unable to answer or fails to respond, typically what could happen is that the business or entity suing you asks the court as well as the county clerk to declare that you owe the amount. So this is what's called a default judgment. So when you prepare a written answer, once it is received, then the court typically reaches out to schedule with an assigned judge as well as the business or entity suing you to schedule a pretrial conference. So at these conferences, they're usually typically trying to see if there is a chance that the parties can come to a settlement agreement. They may discuss if they need to move to arbitration, which would be similar to court, but more like mediation. There is a cost to arbitration and it is binding. However, unlike court, you wouldn't have necessarily a jury, and it's harder to appeal any decisions made in arbitration as they are binding. But besides that, as a pretrial discussion, they will also set forth a schedule to ask for discovery, which is basically asking for evidence, or if not only documents, but also just formal statements, either in writing or in person, about the dispute and the case at hand. So you would set forth the schedule for receiving discovery, but you would also set forth a schedule for trial should it reach that stage. In between trial and discovery, there's also a stage for motion practice. So this would mean a time where a person can ask the court for something. That's typically what is meant for a motion. So with a motion for summary judgment, they are actually asking that based on any papers or documents they've submitted already, that they are asking that the decision be decided without a formal trial. So either a judgment could occur against a person, meaning that they are claimed to owe the amount asked for in the complaint, or a judgment could also maybe dismiss the action entirely. And in some future slides, I will be going over post-judgment issues, such as what is an information subpoena, what happens if a person receives an income execution, some brief details about wage garnishment, and what happens if someone finds that their bank account has been frozen. Now, to start a lawsuit for a debt collection action, a person does have to receive court papers. So this is usually a summons and complaint. And I think some people may recall the phrase like you've been served from former legal dramas. And so if you are going to be served with court papers, there does have to be a proper procedure for receiving those papers. So service of the court papers can be completed in one of the following methods. They need to physically hand it to you at your residence, or they could attend to your workplace and physically deliver it to you there. They could try and deliver it to a person in your household who is of a suitable age and discretion, to someone who is at your house or potentially where you work. And if they deliver it to this person, they do need to write down the details of that, but also mail you a copy of your last known address. And as a last effort, after making due diligent attempts to either physically deliver it to you or deliver it to someone who is a reasonable substitute for you at your house or workplace, the last resort is that they could tape the court papers to your house, and then they could mail you a copy at your last known address. Now, if you receive a summons and complaint, you are required to respond by a written answer. There is typically no court date scheduled for you to respond in person at that stage. However, a person can mail in a written response to the court where the lawsuit is filed and to the attorney for the creditor. So this could be the business lender, the business you were working with, or a debt collection buyer. And their address can be found on the summons. So there is a deadline to answer a debt collection lawsuit. Depending on the court where the lawsuit is filed and how you were served, you could have a time limit as little as 10 days or as many as 40 days from when you receive the court papers. Typically, the timeline is also listed on the paperwork given to you about which court you're in and which method you were served, so a person can review the papers to see how many days they have. Now, a court will treat any written response that you send in as an answer to the lawsuit, but the ideal answer denies the allegations that are made in the complaint about what you owe, and it will list defenses that might apply to defeat or reduce the claim balance. If a person fails to deny or raise any defenses, the court may consider any defenses you later try to raise as waived. Now, if you received an additional notice of a consumer lawsuit, unfortunately, this means there is a lawsuit against you and that the creditor or lender, otherwise known as the plaintiff, the party bringing the lawsuit, has notified the court that you were served with the court papers. And that means that the court clerk is now free and required to send to you a one-page notice letter stating that you are being sued. And this is made in an effort to ensure that people receive notice of the lawsuit. Now, if a person receives a notice of a motion for summary judgment, as I may have stated earlier, so this means that the lender or the business entity is seeking to have the case decided without a trial by stating that all the paper evidence has already been submitted and there are no facts in dispute. You would likely receive court papers in the mail with a court date listed, and a judge would be assigned to this case. However, there would be no formal testimony or statements taken, and no jury would typically hear these motion hearings. Now, if a person does receive the notice of motion for summary judgment, any responses are expected to be in writing before the court date, and it is required that you show up for court. The ideal response would show that either the creditor has not proved that you owe the money or that you have reasonable defenses as to why you did not owe the money. Now, a person could avoid a lawsuit or having a judgment entered against them if they decide to try and reach a settlement agreement. You are not obligated to agree to settle with your creditors or debt buyers, and you do not have to make an offer to settle. And if a person is thinking of making a settlement offer or agreeing to a settlement plan, it's really important that a person can come to some kind of an agreement that they can afford to pay. Now, in terms of a judgment, if a judgment is entered against someone, and this means that the court, as well as maybe the county clerk, declare that a person owes a stated balance, well, those judgments on New York State are valid for 20 years, and they do accrue interest annually at 2%. They also act as liens on any property you own, and this means that it could affect the sale and refinancing of either your house or a car or any other real property assets that you own or personal property assets. So equally, the creditors, so the bank or the lender or business could, with the judgment, garnish your pay or freeze and levy your bank account. So that's like to freeze and withdraw the funds in order to collect the money that they are owed. And unfortunately, accurate negative information may be listed on your credit report for up to 7 years. So originally, the first default or delinquencies on a certain account could be reported for up to 7 years. A person may find their credit score is negatively impacted because of any outstanding debts. Now, if you receive an information subpoena, this means that likely a judgment has been entered against you. If it's been entered against you, it means that this creditor, so bank or lender or debt collector, can periodically serve these papers to you by requesting information about your income and assets, as they are trying to see if there is any income or assets that they can use to collect. And the person is legally required to respond to these, as subpoena is in the name. There is typically a time deadline listed on the papers given to a person, and if a person needs more time to respond, it's best to contact the people listed on the information subpoena to ask for an extension of time. If you receive an income execution, this means that a judgment has been entered against you. So what that means is that a creditor is seeking to withhold 10% of your wages in order to collect on this debt. Now, depending on the facts in your case, you may be able to ask the court to vacate or cancel this judgment. However, that does require more like specific details about your case and the law. So we recommend for any of the situations that I've listed before that you are welcome to come to CLARO sessions. We're a consumer debt walk-in clinic. You can always call ahead and give us a heads up, but you're welcome to walk in at any time. So we have Tuesdays, we're at the Frank E. Merriweather Junior Library on 1324 Jefferson Avenue in Buffalo. And on Fridays, we're at Buffalo City Court from 50 Delaware Ave from Buffalo, New York. On Tuesdays, we're at the library from 4 to 7, and on Fridays, we're at the courthouse from 10 a.m. to 12. You can also get in contact with us by calling our consumer hotline or sending us an email or filling out our online contact form. So that is all I had to my presentation. So I welcome questions for like Livy and myself.
If anybody wants to indicate anything in the chat, a question, a comment. Otherwise, also, if you would like a copy of this recording, again, we're happy to send that along to you if you want to pop your name in there. Otherwise, please just don't forget we're here. We're here to help you. Both agencies have many years of experience in the Western New York area. So don't forget about us. And thank you, Lisa, for sharing your thank you. We appreciate that acknowledgement. And if there's no other comments in the chat, then we will close out today. And again, thank you very much for being here. And we hope it was helpful information. Thanks so much.
Thank you, everyone. Thank you, Libby.
Oh, you're welcome. Bye-bye.
Bye.